There's been a lot of conflicting news about the state of our economy right now. We just got a new report essentially saying that Americans are running out of money. Take a look. Vanguard is one of the largest 401k fund managers in the United States. That means they know what's going on with Americans' retirement accounts. Well, Vanguard just published a report saying that in 2023, a record amount of Americans pulled money out of their 401k accounts through a hardship withdrawal. Now, to make sure we're on the same page, this is people pulling money out of their 401k accounts not to go out and buy a home, which you can do subject to a 10% penalty. This is people pulling money out of the 401k accounts because they're facing some sort of financial hardship. Now, if you're wondering what is a hardship withdrawal, that's when you pull money out of your 401k because you're having an immediate and heavy financial need. Now, you should also remember that just because you're having a hardship does not mean that you can just pull your money out of your 401k free and clear. I mean, number one, you still have to pay taxes on that money. Number two, you're pulling money out of your long-term retirement account. Number three, there's a limit to how much money you can pull out. And number four, you're also subject to a 10% penalty, assuming you're under the age of 59 and a half, unless it falls into one of the few hardship withdrawal exceptions. Now, if you're wondering, why are people pulling money out of the 401ks instead of going into their savings account where they don't have to pay a penalty? Well, CNBC published an article saying that 61% of Americans are expected to run out of their emergency savings by the end of 2024. This is where I wanted to dig a little bit deeper to see how many people are actually pulling money out of their 401ks due to a hardship withdrawal. And here's what I found. 3.6% of Americans with a 401k through Vanguard took a hardship withdrawal in 2023. That's up from 2.8% in 2022, and this is the highest amount of people taking a hardship withdrawal in the almost 20 years that Vanguard has been recording this data. To put that in perspective, more people did a hardship withdrawal in 2023 from the 401ks than they did during the 2020 pandemic. And more people did a hardship withdrawal in 2023 than they did during the 2008 Great Recession. Does anybody see something wrong with that? This brings me to three questions that I want to dive deeper into. Number one is, why are people running out of money and digging into the 401ks? Number two is, what is the consequence of people running out of money and digging into the 401ks? And number three is, how do you protect yourself from these types of financial situations, and how can you make sure you're taking care of yourself financially? So let me dig into number one, why is this happening? Now, I do also want to let you know that on April 2nd, 2024, if you are interested in investing your money in real estate, I am hosting a free, live, and virtual real estate investing workshop where I'm going to be going over my own real estate investing strategies. I'm going to be talking about what's going on in the housing market right now, how I look for a good location to invest my money into, how I find a good property that's going to actually cash flow, and how I try to maximize my profits. It's a completely free workshop. It's live, so you can ask me questions. So if you're interested in investing your money in real estate, I would love to see you at this workshop. Just make sure you register soon because there's a limited number of people that can actually join me live. So if you'd like to join me, I got the link for you down in the description below. And now let's jump back into the why. This is a chart from the Federal Reserve Bank showing the personal savings rate in the United States. And what you'll see is that during the pandemic, savings were booming because, well, no one was spending any money and people were getting free money from the government. But then savings rates naturally crashed when the economy opened. But then you started to see this little bump in savings rates towards the end of 2022 and in the beginning part of 2023. But ever since around May of 2023, savings rates have been steadily declining. Now, to really understand this part of why, I like to kind of break this up into two parts. The them versus us. The them are things that we can't control. The us are things that we can control. So let me start by talking about the them. Things are just a lot more expensive today. We've been seeing super high inflation, which means that the average person now has to spend more money on their groceries, more money on their rent, more money on their travel. And for most people, their incomes have not grown fast enough to keep up with the higher cost of things, which means for most people, you are spending a bigger chunk of your salary to maintain that same lifestyle that you had back in 2019 or even 2021. And this is where now people have to make the decision of, what am I going to do? Am I going to continue spending more and more of my income to maintain this lifestyle and save less money and invest less money? Or am I going to downsize my lifestyle? This brings me to the us side of what's going on here, which is, well, a lot of people have said, you know what, I don't want to sacrifice my lifestyle, so I will make other sacrifices. What are these other sacrifices? Well, we've seen more and more Americans dig deeper into their credit cards because credit card debt has broken a new record high. We've been seeing people pull money out of their home, that way they can keep spending and living their lifestyle. We've been seeing more people go down this buy now, pay later route, which is where they're financing things through buy now and pay later. We've also seen people dig into their savings account to spend their savings, and now we are seeing more and more Americans dig into their 401ks through this hardship withdrawal. See, we can't control how much money Chipotle charges for their guac, but we can control if we're gonna go and buy the Chipotle. We can control if we're gonna buy the extra guac. And what people are saying is Chipotle is charging more money, Walmart is charging more money, Whole Foods is charging more money, everybody charges more money, and I'm gonna continue paying this more money through this other source of money, whether it's pulling cash out of my home, whether it's my 401k, whether it's my credit card. I'm going to continue spending even if I don't have the income for it because I want to keep living this lifestyle. So the them we can't control, but people are still choosing to spend money. This brings me to number 2, which is, what is the consequence of this? And there are 2 separate sets of consequences. Again, there's a consequence to me, and then there's a consequence to them, the economy. Now, the consequence to me, meaning the person who is spending money out of their 401k, is pretty clear. You're pulling money out of your future retirement, that way you can spend this money today. And not just that, you got to pay taxes on this money, and then you have to pay this 10% penalty on this money, assuming you're not 59 and a half years old and it doesn't meet one of those few conditions. So now you have to pay a penalty on this money, you have to pay taxes on this money, and then you get to spend this money. And then the consequence of this is you have less money being invested to actually build you wealth for your retirement. And we know what's going on right now with retirement because we're seeing this major baby boomer crisis where baby boomers do not have enough money saved for retirement. So we're already seeing the impacts of people not saving enough money for retirement. And so now if you're starting to pull money out of your 401k today, that way you can continue funding your lifestyle, you can start to see why that would be a bigger problem later on, because that means more and more people will have less money for retirement. That is the me consequence. But there's also the you, the them consequence, which is, well, if more and more people run out of the ability to spend money, what does that mean for the economy? Because you got to remember, our economic system runs on spending. Now, you've probably heard me say this a million times now, but if our economic system runs on spending, well, when people spend more money, that's good for the economy in the short term. And that's what we've been seeing happen right now, is that the consumer has been strong. And this is what has kept the economy booming and roaring, because people are still spending money. But how are people spending their money? More and more people are digging into their credit cards. More and more people are pulling cash out of their homes. More and more people are digging into their savings, and now more and more people are digging into their 401ks. So there's finding alternative ways to spend money besides their income, because people's income is not enough to support their lifestyles. And so if people have to keep spending money through these alternative source of funding or cash, well, you'd have to think that eventually there's going to be a breaking point. I mean, inflation is still hot today, which means the prices of things are still rising, which means that a lot of people are still having to pay more and more money to fund their lifestyle. And if we hit this quote unquote breaking point where now more and more Americans are going deeper into debt and they're spending the life savings and the life retirement accounts, well, that could lead to a bigger problem in the economy. Because if people spend all their money, then they don't have more money to continue spending. And if people don't have money to go to Chipotle, if people don't have money to shop at Walmart, if people don't have money to shop at Whole Foods, if people don't have money to pay their rent, that means these businesses stop making money. And if these businesses stop making money, well, then they might not have any more money to keep paying for more employees or opening more stores. And then that could lead to a potential economic slowdown. Now, we know that our economy goes through booms and busts. This is a part of our economic system. This has happened every decade for the last century, that our economy has gone through ups and downs. This is a fact. Now, we have seen over the last century that our economy has grown overall, but we still see these ups and downs and ups and downs and ups and downs. But a lot of people like to live in this la-la land where they believe that everything is going to continue going straight up forever. So it's okay for me to pull money out of my 401k. It's okay for me to go into debt. It's okay for me not having savings because my income will always be there. I can keep working to keep funding this lifestyle. But what happens if your income goes away? What happens if something happens to your job? What happens if you can't work? And now you have all these liabilities, you have no retirement account, and now you're already deep in debt. How do you continue funding your lifestyle if something bad were to happen? Now, hopefully nothing bad happens, but we have to think that something bad will eventually happen, right? I mean, who knows when? Maybe it'll be 2024, maybe 2025, maybe 2035. Nobody knows. But if you're living down this lifestyle of just spending high and spending freely and going into debt and now spending our retirement accounts with nothing to protect us besides this income that is barely enough to get by, we are really kind of walking this tightrope that if we get any little gust in the economy, that could push a lot of people over the edge, which is not good on the economic side of things for a lot of people. Now, this also creates opportunity, unfortunately, but it's reality. This creates opportunity for people who understand this and who are protected. Because when 2020 happened, I'll give you an example. When 2020 happened, people were not protected. A lot of people had no savings. Businesses had no savings. The economy immediately went into downfall mode. The economy went into free fall, and this created huge opportunity for people that had money to go out and invest into stocks. And people that did that were able to make a huge return. And I talked about this openly on YouTube, how I was buying stocks on the way down. I had no idea what was going to happen in March 2020. No one expected, especially me, that the Federal Reserve Bank was going to open up the money printer the way that they did. But that happened, and we saw the markets immediately turn around. We saw the same thing happen after the 2008 crash. People were spending money 2004, 2005, 2006, 2007, and even a little bit into 2008 until the bubble burst. And then when the bubble burst, we saw real estate prices fall, stock prices fall. But the people that had money and that were prepared were able to go out and buy stocks at a 50% discount. And the people that had money were able to go out and buy real estate, in some instances, at an 80 or 90% discount. I can tell you from experience because I was able to go out and start buying rental properties at huge discounts because nobody else was buying at the time. Now, of course, these were extreme examples. And this is really just where what you want to understand here is there's always going to be opportunity. And you want to make sure that you're protecting yourself in a couple of ways. Number one is if you do see a downturn, you want to make sure that you're protected by having some savings. And that means now not spending all your money and not going into your retirement accounts. Number two is you want to also be investing your money on the upside and the downside. On the upside meaning you want to consistently be investing your money. Right? Because no one can predict what's going to happen in the markets tomorrow. You never know what's going to happen. Okay? Nobody knows what's going to happen tomorrow. Everybody has a guess, everybody has an opinion, but nobody knows for sure. And this is where when you try to time the market, what ends up happening to a lot of people is you end up missing the boat. You miss the boat on the way up and you miss the boat on the way down. So instead of just trying to time the market, continually investing your money is a great way now for you to get exposure into the market. Then, when you see a downturn, and notice how I say when, because it's a fact that our economy will eventually go down. It's a fact that our stock market will eventually go down. When, I have no idea, but we know that this will happen. But when markets go down, that creates an opportunity for you to go out and buy even more aggressively. But you can only do that if you're prepared, meaning you have some cash put aside and you're financially educated to know that you should be investing when things get bad. Because those are opportunities for the people that are financially educated. Now, what does this mean for you? Well, if you are facing a financial hardship, the last thing that you want to do is dig into your long-term investment accounts because not only do you have to pay the taxes, but you also have to pay that penalty before anything else. Before you do that, find other ways without debt to continue funding your lifestyle. Maybe that means you got to downsize. Maybe that means you have to sell your car. Maybe that means you have to sell your home. Maybe that means you have to get a smaller apartment. Maybe that means you have to sell some furniture. Maybe that means you have to sell some electronics. These things are not comfortable, but it's better for you to make those financial sacrifices than for you to dig into your 401k. And then also work to earn some more money. Maybe that means you work to get a second job. Maybe that means you work to get a career change. Maybe that means you got to get a certificate so you can get a different type of job. Maybe that means you got to go back to school. Maybe that means you got to get a trade skill that way you have some other source of income. Maybe that means you got to start a side hustle. Maybe that means you got to start your own business. But you're going to have to work now to earn some more money. That way, if you want to maintain this lifestyle, you got to have the money to keep doing that. And if you don't have the money to maintain this lifestyle, you got to downsize the lifestyle. And if you're downsizing the lifestyle, you can also work to earn some more money so you have some more money to save and invest to build you wealth, because that's how you become wealthy. You don't become wealthy by spending your 401k money. You don't become wealthy by spending your credit card money. You don't become wealthy by financing your BMW. You might look like you've made it, but you're really just making everybody else rich, and now you got to spend more time trying to break out of being broke to actually have a chance to become wealthy. And this is where now you got to take a hard look in the mirror and see what it is that you want. Now again, the reality in this economic system is that there are winners and there are losers. And this is very painful for a lot of people to hear. But the nice part of this economic system is anybody can be a winner when you have the right financial education, when you have the discipline, when you're willing to put in the work, and when you're willing to learn. Now, it doesn't happen overnight. I call it a decade of sacrifice. But if you're willing to put in that work, you can break out of the system and live a completely different life financially. But that's going to require you to start making those sacrifices and to realize that your investments are what is going to make you wealthy. All these things are what keep you broke. Now, I am not against you having nice things. I want you to have the nice things. I just want you to be rich first. That way you can afford the nice things. That way you don't have to stress about the cost of these things. And so these things are not the reason why you're actually broke. So let's dive a little bit deeper into the 3 ways that you can earn money in our economic system. If you want to go out and buy yourself the extra guac, you need the money to be able to do that. Now the question is, how can you get the money to buy the extra guac? And in our economic system, there are 3 ways that you can get paid. Number 1 is about being a worker. You can work in a company and get paid a paycheck. Number 2 is you can be